GM.
GM.
Everyone, welcome back to the Solana Floor Weekly Recap, where we're going to chat through Solana's biggest stories straight from the Solana Floor newsroom. I'm joined, of course, as always, by our senior journalist, Finn. Finn, GM.
Jack, GM, how we doing?
Great. And, of course, the one and only Mr. Thomas Bahamas joins us as well. Thomas, GM.
GM, everyone. How we doing?
We are excellent. Now, we're going to break through what's just noise, what's actually worth your attention, and what's moving the ecosystem today. I'm happy to report that we've had a fairly packed week. I want to say price action is sort of finally moving in the right direction, up, that is, after a slight breakout to the upside. There is a lot to cover. We have super excitement around the SKR Airdrop, which is coming next week, the 20th or the 21st, depending on where in the world you are. We have big prediction market news with Kalshi. We're touching on some privacy meta. We've got Helium disappointment. That was quite a spicy story. And it seems that meme coins are maybe making a bit of a comeback as well. So we'll touch on all of those. Now, one thing that I think we need to touch on maybe towards the end of this conversation, boys, let me know if you agree with this, is the US Senate Clarity Act discussion. It seems the banks have sort of stepped in, said that they're not very happy with stablecoin yields, and they're sort of blocking progress for the entire digital assets industry. So should we talk about that towards the end? What do you think?
100%.
Yeah, we can throw that towards the end as a bit of a full roundup. It's shocking to me that all the suits in Congress and the Senate are, for some reason, unable to make any decisions.
Absolutely. It's not looking good, but I guess the optimistic take on that is we should have some clarity about the Clarity Act by the end of January. They're set to hopefully sort of align their interests and submit some amendments. So let's dive straight in. Finn, your newsletter, which I'm going to pull up in just a second. The first headline, quite a spicy one: Range of buyback proposals spark debate on ownership coins because, drumroll, Ranger investors proposed using the treasury funds to buy $2 million of Ranger tokens. So is this, people sort of abusing the governance token system to maybe just pump their bags? What do we think?
Yeah, so this is a story of governance in action on Solana. As I'm sure a lot of people are aware, Ranger Finance, who's a perps aggregator, they recently launched their ICO through MetaDAO. They raised $8 million in capital. So first of all, well done to them for doing that. But obviously, price has dropped a bit since that launch, and ICO participants have decided that actually they're going to float a governance proposal to use 25% of Ranger's treasury to buy back $2 million worth of Ranger tokens from the market. I was surprised that this passed originally. So yeah, after that proposal went live, there's a bit of debate on the timeline about whether this is an appropriate use of governance. The few target governance markets have decided that this proposal will pass. $2 million worth of Ranger's treasury will be going back to buying back those tokens, and people are very divided. I think personally, if I was the Ranger team, I would be gutted that you've just launched and all of a sudden your treasury is almost being held to ransom by people who supposedly were meant to support you long term. Since that proposal has passed as well and the buybacks have begun, Ranger has been down only. So yeah, it's looking like this has backfired on basically everyone involved. Thomas, you're a bit of a futaki man. What's your view here?
Yeah, I think there's so much going on here, right? I mean, buybacks have been kind of all the rage for all these, how do we support a token? How do you support a token? And to see this come out right after they got done raising, it's just kind of sad. Like you don't want to start your way out like this. So I think it's an interesting, way to go about it, but it shows just how messy governance is. I think it's kind of testing, how ownership coins are viewed in general. Like you can see the MetaDAO token is taking a hit from this as well. And, I don't think it's like this is the example that shows that it's over. I think this is the example that shows like a lot of these things are very messy. When things don't go right, people want something to happen. So they got something to happen. Is it reflecting well in the price? No. Is it reflecting well in how things are going to shape up in the long run? We'll see. Right. It is just messy. And I'm not sure about your thoughts there, Jack.
Well, a few thoughts. I want to tie it into buyback specifically here. Now, one thing that I know we're going to touch on towards the end of this conversation is let's say a statement from the user titled 8-Bit Penis. He called it the worst thing to happen to ownership coins. Now, I think that remains to be seen, but it's definitely, to your point, Thomas, a challenge along the way. This is obviously an innovation. New things are being tried. But here's what bothers me a little bit more. I think on paper, it sounds simple, right? You do some buybacks, price moves hopefully in the right direction. You align incentives between the project and the community, but the reaction so far is very, very divided. My question here is, and I think a lot of people are wondering is, surely buybacks are good. Surely ownership tokens and Futaki sort of helps move us in the right direction as far as better governance goes. And I think one of the interesting angles that you brought up recently is, are people just looking for exit liquidity? Or is this going to lead into the discussion that we were talking about with Austin Federa during Breakpoint, which is that maybe in 2025 and 2026, buybacks are sort of a mid-curve approach, and projects should focus on value and product and actually distribution. Curious if you guys share those sort of strong feelings about buybacks and whether or not the community is just using this Futaki system for exit liquidity.
Yeah, I think in this case, it's a very clear example of people wanting $2 million worth of buy-side liquidity to sell their failed ICO into, right? Because this was
You're not sugarcoating it, Finn. It's a clear example.
This was presented prior to the ICO as being like, this is a guaranteed 3-4x, guys. Like everything that goes through MetaDAO goes up. You're not going to lose here. The demand is huge because of the oversubscription model, and people found themselves down, 10-20% after launch. And obviously, they're going to start using those tokens and using that governance to their advantage. So 8-Bit Penis, who I respect a lot. I think he's quite clever. I think he has a lot of good takes. He said this is the worst thing to happen to ownership coins, but this is also like the exact premise of what ownership coins are, is that people who hold ownership coins can do this, and they can hold the company's treasury ransom like this. So it's, it's play stupid games, stupid prizes almost to a degree.
I agree. Mr. Bahamas, you spoke with Profit at Breakpoint. So curious if there's any sort of hot takes that you can bring into the conversation here about Futaki, about ownership, about this sort of, I guess, slight manipulation of ownership and governance for financial upside. What do you think?
Yeah, I mean, we had a fantastic conversation with him, and this isn't like the best look for Futarchy for MetaDAO right now, but I still think that tokens on in crypto are the most interesting part, right? So I think that businesses that launch in crypto on Solana, they're going to have a token, right? So we need to figure out a structure, a way, or like an agreed upon method for like how these businesses can launch a token well, right? So like we're all here buying tokens. We're all looking at tokens. We track the price of these. So it's like, what is the best way to do them? And MetaDAO proposed a very good way to do it. It doesn't seem like it's perfect. I think in general, like I said, governance is very messy, but I think this is a good attempt, and it's a move in the right direction. When we spoke to Prophet, he was, super knowledgeable. He had great takes on it. And, I think that early stage companies are very tough in general, right? Especially in crypto and on Solana, a lot of these, raise capital early, and if they don't make money in the first month, they're dead. We don't want that as an industry. We want to be able to support all of the founders. We want them to be able to raise money. And the beginning stages of a company are extremely volatile, right? So the more that we can facilitate, anybody that wants to build on Solana and have a good way for them to raise, the better off everybody is, right? So I'm still bullish on MetaDAO. And I think this is going to be another hiccup along the way. And there's going to be many of them, right? I don't think there's going to be a standard model, that's going to work for everyone. Otherwise, we would have seen that already, right?
True.
Yeah. And like to your point, I think they are solving a pretty big problem. We've seen a lot of complaints about the dual equity and token legal structure. So by abolishing that and by kind of solidifying everything into a sole economic unit, I think MetaDAO is making steps in the right direction. But I don't think that early stage teams should have their treasury held captive by a bunch of speculators who are there for a quick flip on launch day. I think that's counterintuitive to progress. Personally.
I think that's a really, really good takeaway. And my sort of final take on it, not so spicy, quite vanilla, is that, to your point, Thomas, it's obviously an experiment. It's not a failed experiment. We are making progress, but at the end of the day, if people are joining a project's TGE, they should do it in good faith. And you definitely don't want buybacks to end up replacing things like growth, innovation, distribution, progress on the product side. So curious to see how this Ranger debate plays out. I have a feeling we'll be following that and Futaki and ownership coins closely for the coming weeks. Now, we do need to jump ahead because It's my favorite story of your newsletter this week, Finn. It's what excites me the most. I think it's going to be what excites me the most next week. It was certainly the most exciting thing last week, and probably most of Q4 as well, given how bad the price action was. And it is, of course, the SKR airdrop. Let me switch back to this so people can see the headline here. Now, here's everything you need to know about the SKR airdrop is the piece by Pablo this week. Again, I can't understate how excited I am about this. Allocation checker is live. So if you are listening to this and you haven't yet checked, then go and open your seeker. It's gonna be, I think, surprising. It's gonna be, I think, positively surprising, depending on where in the world you are. You're getting these tokens on the 20th or the 21st. So go and check out what the time zone is. I really expect it to be quite juicy for you. And if you have a seeker and you haven't yet used it, the TLDR here is that you should still go and use it because there is a season 2. Now, Finn, Thomas, I know you both have seekers as well. Let's dive straight into it, Finn. Do you want to talk us through the article, and then we can talk about some of these milestones and how likely we are to be positively or negatively surprised by the actual dollar amount of the airdrop?
Yes. So, as we know, the SKR TGE is going to be on the 20th or the 21st. About 2 billion tokens have been allocated across all Seeker users. I'm happy that they went with this tiered allocation model. I think that's quite an elegant way to do it. Obviously, some people were upset about their allocation, as people are always going to be. The thing that kind of bugged me with it, though, is that a lot of people's complaints was they bought the Seeker, they didn't use it, they didn't take it out of the box, and then they didn't get a good allocation because of that. You know, they used it for one transaction and they're unhappy with getting the lowest grade. Reality is, guys, if you don't use your seeker, you're probably going to be less incentivized to continue using it, right?
And just on that very quickly, sorry, I'm cutting you off here, Finn, but I thought we were done with the whole participation trophy thing, right? You don't get rewarded for doing nothing in this industry. Obviously, if someone's gone and built something as complex as a phone and shipped it all around the world, which has its own logistical challenges, then you can expect that you have to use it. You have to participate to be properly rewarded in it. But sorry, I digress. Continue.
Yeah, no, and you've hit the nail on the head. Like 100% agree with you with that. So the thing that stood out to me the most, though, is that the developers of the Solana ecosystem were given a hefty allocation. I think if you've made an app and you've submitted it to the Solana dApp store, you can find yourself with, I believe, 750,000 SKR straight off the bat. This, for me, is a tremendous incentive because the Solana dApp store is useless without the apps that live within it. So incentivizing these developers to get out there and make meaningful apps that we can all use to grow the ecosystem is very, very much something that needs to be kind of pushed as much as possible. So I think congrats Solana Mobile for making sure that developers are feeling as inspired to get amongst that. Thomas, how are you feeling? You had about 3 seekers. How did this play out for you?
Yeah. So first of all, I'm really excited about this. Okay. I think that we're in a completely different place right now with the seeker launch than where we were when Saga launched. Right. So I think that people are kind of seeing the two and they want the exact same thing to happen. You know, we're in a different place right now. And I think that the way that this airdrop is being done is reflecting that. Right. So, you know, we have the users. There's, 100,000 plus seeker phones out there. You know, I am the owner of 3 of them and I didn't use my phones that much. Right. I have one that I use pretty consistently. And, I got 10,000 tokens per basically, so I didn't get that much because I wasn't using it that much.
So you're a prospector times 3, Thomas.
Yes. So I'm 3 times prospector, which, you know what, like that probably makes sense to me. I wasn't like actively farming things, but the way that I did it, like I still was going in and checking out all the dApps. Like I was a user that was intrigued by like, all right, what are people launching? What's going on? So the fact that they're like, they're really actively like rewarding all the developers for releasing these. They're also rewarding users for them. That's what I want to see. Like when I think of Seeker, I think of like, hey, this is the potential for a ton of use, for mobile. That's a lot safer. And it has like having its own dApp store is such like, I don't know, it's such like a change in the way that a lot of things are going to work. So to bring people to it, I think is fantastic. And the good news is we know how this works. So you missed season 1, there is going to be a season 2, and I think that there is like so much like potential in the way that this goes. Right? There are no institutional investors. Right? This is coming out on day 1. They're rewarding the community with a total of 30% of all the tokens. I think this is 20% right now. So the way that they're doing it is it's very fair, right? You know, you get to be a part of this, and they're going to have staking after, they're going to have the guardians set up. So I think that for me, like, I'm excited to be able to participate in this ecosystem. You know, I feel like I'm a part of it, so I want it to succeed. So I'm
Absolutely.
genuinely excited about it.
I just want to, before we get to the community reactions, which largely positive, but as you mentioned, Finn, have been, you know, I guess there have been some interesting takes out there. This pre-market sort of valuation here of if you were a developer or you got the highest tier of the airdrop allocation, which is 750,000 tokens, some people estimate that it will be valued at $11,000 at pre-market prices. I don't know. Is that too much? I saw one post arguing that it would be between $15,000 and $33,000. These numbers seem very high to me.
Yeah, I think pre-market is unreliable at best. So far we have two ways of checking this. Wales market is pricing it at about 1.5 cents per SKR. That being said, Wales market's got about 50K of volume, so that's hardly reliable. Polymarket is saying that the FDV will be over 100 million with about 24 hours after launch. So if we go by that pricing, Polymarket's saying like about 80% chance that it's over 100 million FDV. So if that's the case, then SKR is 1 cent. And then, yeah, if you are a top allocation receiver, then you're getting, I think, about 7.5K more or less.
Which is very, very nice.
For a $500 phone is a pretty incredible return already.
Seems like a very good trade-off for me. And speaking of the FDV 24 hours after launch, we also know that there aren't any, I don't want to call them greedy, but there aren't any cheeky VCs waiting with, you know, huge bags ready to dump that on TGE, because there weren't any VCs. This was a completely fair launch project, and there is no VC baggage. So I suspect that will have a positive impact on the price, at least within the first 48 hours. Now, let's get into these community reactions. You mentioned earlier that, let me switch tabs here. People who received their phones but weren't really using it argued that they sort of missed out. I think what I would say to them is you haven't yet missed out. There is a season 2. There is a growing ecosystem here of dApps. I think 256 so far off the top of my head. Something like $2.65 billion has been already transacted through the system. So all signs to me point like this is an expanding ecosystem. And we also know that Emmett has hinted at new hardware devices entering the Seeker ecosystem as well. So what do we think about that?
I think it's brilliant, honestly. I think expanding to new hardware is massive, because $500 is a lot of money for a lot of people. Like, for a lot of people, they can't afford a Seeker at $500. If you drop that down to $100, $200, whatever the price may be, you open the Seeker ecosystem to a massively wider potential user base. The TAM grows almost exponentially, and all of a sudden we could find ourselves with 1 million Seeker users instead of just 100,000. So yeah, I think that's a 4D chess 200 IQ move from Solana Marble there.
Absolutely. Can you very quickly talk me through this how to claim SKR section? Because there might be people listening who maybe just haven't picked up their Seeker in a few days, or indeed haven't activated it yet. So how would people go and claim them, either on the 20th or on the 21st, depending on where in the world you are?
Yep. So it looks like it's going to be a pretty easy process. Open up your Seeker, head to the Seed Vault Wallet app, and slide across to that activity tab, and everything should be there waiting for you. So don't click any links. Don't, hit anything on Twitter that might take you somewhere. It's all going to be happening within the Seed Vault wallet. So don't be led astray.
Absolutely. Okay, so I just want to really reiterate this, because the next chapter in the article obviously is what's next for the Seeker ecosystem, which means there is a chapter 2 for the Seeker ecosystem. This thing is growing. And if you might see behind me, I've got one. It's my second Seeker. I'm definitely going to be opening that and playing around with it for season 2 as well. Now, the point is, this is a growing ecosystem. You've got more dApps coming in, more developers coming in, more hardware coming in, and arguably more users as well, because 170,000 devices were distributed, if I'm not mistaken. So I suspect a lot of people have multiple devices, and they maybe just wanted to see what the token was worth, to see if there's any sort of VC baggage, and that seems to be not the case. So I don't think people should be discouraged. Another airdrop is coming. It's not too late for you to get involved, and I'll be opening that. So actually, guys, question to you: what should I replace that Seeker in the back with once I take it out of the package? We're gonna have to find something cool to put there. What can we do?
Hard hat, 100%.
You would. Crazy blue sky prediction for season 2.
Yeah.
Imagine a world where SKR is in a year's time, it's trading above at least 2x above what it launches at. All of a sudden, the 10% that might have been allocated to season 2, which is half of what's getting allocated to season 1, might actually technically be worth more than what got sent out in season 1. So I think that paints an elegant point to the fact that even if you miss season 1, season 2 might still have plenty to offer. If SKR performs well economically, all of a sudden that becomes an extremely palatable airdrop for anyone who's on the fence about whether it's worth it.
Absolutely.
Yeah, and we shouldn't have. Oh, sorry there. Yeah,
No,
we
no,
shouldn't
continue,
have that.
Thomas. I can't get the idea out of my head of having a watch and a tablet and a phone that all lets me use a Solana wallet. But sorry, I cut you off there. Continue.
Oh yeah, and I was just gonna say too. It's like there's less sell pressure because there aren't that like VC influence, right? There are no insiders on this coin. It's like we, the community, are the insiders, right? So I think that there's a lot there, right? And this is the second token that the Solana Labs team is actually launching, other than Solana. So I think that they put a lot of thought into how to do this, how to reward the users, how to incentivize users, how to incentivize developers. So I think that season 1 went really well in my mind, and I think there's a big opportunity for season 2, right? So if you're feeling the FOMO while everyone's claiming their seeker, I mean, you're not too late, right? You can still get one of these. You can still participate.
Super excited to see what happens on the 20th/21st. All right, that's a lot on Seeker. We're going to run out of time, so let's hop over to the third story in the newsletter. Can you see this headline that I'm sharing here?
Yeah.
The headline is Solana breaks key range as close to $700 million in shorts get liquidated. I mean, this is super exciting. This is super bullish. Maybe, is it? I don't know. Are we actually breaking out of that key range? Broad sort of crypto market liquidations got close to $700 million. You've got a beautiful image on the article itself, which I'm going to share. A huge God candle that, fingers crossed it becomes sort of the only thing that we talk about in coming weeks. But is this a full bullish reversal? Finn, you and I briefly discussed feeling somewhat sidelined. I know metals are running, which we'll talk on with Thomas Bahamas in a second as well. Is this a real sort of market structure shift? What's going on?
I'm not totally convinced at this stage, but I think what's important to mention is that Bitcoin has broken 94K. I think the past 99 days, that was a level that we kept getting rejected at. After 1010, there's been a lot of lingering thoughts that that's a forced selling point, and that every time we get that high, people are just unloading back into the market to kind of reclaim things that were lost in the 1010 market wipe. So the fact that we're above 94K and that we're still holding above 94K, I think is very, very bullish for the market in general. Every other asset has basically followed Bitcoin in that move. So Solana's also broken up past about 143, I want to say, and holding it there as well. So I think if we can hold 94K, then it does signal a change in market structure. If we dip back down, then we're maybe grinding back down to Hades for a bit longer. Obviously, NFA, I'm not a TA wizard. This is just some guy chatting about what he thinks is going to happen. Thomas, we're talking about Trump's economic boom is kind of the underlying structure for why this is happening. What's your read on Trump's economic boom?
Yeah, I mean, I kind of believe it. At this point, I feel like there's enough things leading up to this that the market's kind of starting to show some life, right? We're starting to see some pumps rather than like severe dumps. So I think that it's positive. And I mean, there has been a lot of really good, significant news, right? Like the US GDP is running way hotter than they thought it was going to be. So the economy is better. We've seen the stock markets, go up only. We've seen metals go up only. But a lot that is happening on Solana has been very positive, and we haven't seen anything reflect that in the price. So I think that's starting to catch up. I'm hoping it is. So, can we say that it's the Trump boom? Maybe. I mean, there's been a lot of positive developments on Solana as well, right? So I just got done with a piece that's all about RWAs on Solana. And I mean, we just recently crossed $1 billion worth of RWAs on Solana. So I'm really bullish on them. I think that there is a lot there. I think, you're able to trade anything on Solana, which is very positive. I'd say that, we're seeing these inflows come in as well. So we're kind of running everything pretty hot on Solana. So for the price to not do something for so long is kind of interesting for me, right? So I think a lot of setup is there. You know, and I know we don't talk about prices too much, but you know, I obviously hold Solana, so I want it to go up. So
Thomas,
I like seeing that.
you reminded me of that meme where it's some guy poking it with a stick saying "do something." I feel like that's the sort of make it move up. That's the energy that I'm getting. But Finn, it's obviously not just inflows to BTF and ETFs. I'm sorry, BTC and ETFs that have been performing really well, because meme coins as well seem to be having a bit of a revival. And this chart that we have on screen here with the infamous fear and greed index seems to be sort of moving towards the middle a little bit. So is this a trench revival?
Yeah. Look, if you scroll down a tiny bit more, you'll see that Pump Fund is actually leading Solana DEX volumes, or it was on this day that this article went out. It's a bit of a tug of war at the moment between Meteor and Pump, because Meteor is getting a lot of those bags, AI coins that are just rolling through. If you scroll down a bit further, you can see that meme coin volume dominance is steadily climbing. At this point, it was at about 38% of all on-chain volume was going through meme coins. Today, it's up at about 68. So yeah, look, that is an indicator that people are going further and further down the risk curve. Long tail assets are back in full force, and people are ready to throw it all on some random coin that gets shilled to them on Twitter. So look, meme coins are back, but it's not only meme coins, like you say. Bitcoin ETFs have recorded their highest inflow since October 7. This is massive. So that last green candle on that chart there is around $750 million. And the day after that was about 850. So the suits are piling back in, they're seeing the opportunity. And as we've said in the past, ETF buyers are probably not going to sell in the next week or so. So inflows are good. It's looking pretty optimistic in TradFi land.
I guess the only thing that we really, really need to sort of draw the line under Q4 now in terms of price action is for the Clarity Act to either get tossed in the bin and then we're sort of back to square one, or be approved without all this interference from the banks who aren't very happy with stablecoin yields, because they suspect that it's going to eat into their billions and trillions of dollars of profits. So yeah, if it doesn't work out, obviously that's going to be a massive spanner in the works for crypto. But I suspect over this weekend and next we'll have a better idea of how the market's pricing that in. And Finn, to your point, we'll probably see ETF inflows reacting to what happened yesterday and the day before in the US Senate. And who knows, maybe we'll see people going further down the risk curve even more. Moving on to our fourth story of the week here. I'm going to go back into your newsletter, Finn. Privacy Cash launches swaps. This is quite interesting, as daily addresses hit an all-time high. I'll be honest with you, I didn't see this coming. For context, sort of zooming out for a quick second, within the privacy meta, we know the core dev team of Zcash reportedly quit. Price sort of corrected massively, but it turned out there was some FUD around how that story was reported. And then there was another sort of a second blow, if you will, from the UAE government, right, who said they're going to ban privacy tokens and you can't shill it. And Zcash is obviously included in that. And they cited AML concerns and some sanctions issues as well. But then, the headline here is that Privacy Cash launches swaps and daily addresses hit an all-time high, which I think is really the more interesting part. So to me, it seems that interest in privacy tokens is still on the rise. Finn, there is some controversy here, though. Walk us through the story.
So this story comes down in two parts, I would say. The first, as I said, is that Privacy Cash, who is one of the most popular and probably leading privacy apps on Solana, has introduced swaps. In the past, it was just a mixer where you can deposit and withdraw, and no one's going to know which wallet money is being withdrawn to. Now they're introducing swaps for Sol, USD, USDT, or Staked Or, and Zcash, I believe, at the moment. So basically what that means is that you can swap coins, and if you look at your wallet on a block explorer, there's going to be no record of that taking place, which is a great feature. I think the wider lens here is that, like you say, there's been a bit of regulatory controversy around privacy coins in general. The Zcash Foundation, I believe, published a story that the SEC ordered a non-regulatory action, a recommendation of no regulatory action against them. So that's great for Zcash maxis. Beyond that, XMR Monero has hit a new all-time high. I think it's broken out of a range that it was in for honestly years. So while there's a lot of kind of contingency on privacy around the market, the market is actually showing that people want XMR, they want Zcash, and Privacy Cash, more and more people using it every single day. So I reckon there's probably a great civil opportunity here for people who want to use Privacy Cash. There's no token yet. Maybe there will be one day. They're not kind of doing any airdrop farming propaganda, but yeah, give it a go. It's a good little app.
Yeah,
Thomas, the Solana angle, make it make sense to us from a Solana perspective, please, because I know it's not all roses and daisies as far as Solana land sees it.
yeah. So I guess there are a few things here, but I think at the core of this, like, I'm very excited. I'm pro privacy, right? Like we need some sort of privacy as consumers, right? And we don't have that right now. So I think that the privacy meta, it has legs. Like there are good reasons for it. And I really like this idea, and it shows, just that the appetite is there, right? Like the Solana community wants it. They're using this. However, is it fully private? Like there are some concerns to this. Like I like this direction, but I know that there was a Cloak Dev post which asked, is it really private, or are you just sending it to another wallet for swapping? He said, so it's mixing, not private, just obscured. So is it full privacy? No, but is it a step in the right direction? 100%, right? So I don't know if this is going to be, what gets privacy, fully going on Solana, but I like the direction of this. And, this is early, right? They've only been out for a month or a couple months at this point. So for them to have like this amount of progress, it shows that people want this. So I'm bullish on it, but I don't quite think we're there yet, but we're headed in the right direction.
Story of this week is we're not there yet. I think we're making progress.
I think there's a massive room for growth for Privacy Cash, because I was checking some of the cross-chain data, and between Tornado Cash, Railgun, and Privacy Cash does about 8% of all private transactions across all chains. So it's early days, like you say, Thomas. I think they launched in maybe August, and they're already started to eat into that market share of apps that have been here for years. So clear skies for Privacy Cash if they can kind of get on top of some of these concerns that it's not private, just obscured.
You mentioned Tornado Cash there, so I'm just gonna end this on one final thing. I feel like it was close to a decade ago, but maybe it was mid to late 2022. There was the whole Tornado Cash fiasco, and I was living in the Netherlands at the time, and we ended up making a documentary about this. But basically, Tornado Cash was sanctioned by OFAC, right? This is under the sort of dreaded Gary Gensler SEC regime. The Dutch officials were involved. There was this sort of internationally orchestrated arrest, turned into a bit of a witch hunt of a guy who was just contributing code to Tornado Cash, which, as we know, is a mixer. But we've come so far since then, right? I don't suspect the U.S. government or its various agencies are going to go after Privacy Cash for launching swaps now. I don't suppose there's going to be any sanctions coming from OFAC. So as much as the UAE government has turned around and said, you can't go around shilling privacy tokens, I do feel like we've come a long way. But to your point, Finn, there's definitely a lot more progress to be made. Okay, we are going to run out of time, and we don't want the UAE government coming after us for talking about privacy coins here. So let's switch over to your newsletter. Now, the fifth headline here is about prediction markets. We've been super excited about Kalshi for weeks now. They are fully regulated, unlike poly markets. So I'm super impressed by what they've done here through this partnership with DFlow and Jupiter integration, more than a partnership, because we're getting sort of Solana native prediction markets now here as well. Finn, talk me through the news. Obviously, again, we've been super excited about this, but is it? Do you agree that the sort of Solana native aspect is the most interesting, or is there something I'm missing here?
I think what's most interesting for this is how a simple integration with a wallet can really extrapolate volume for prediction markets. So if you scroll down a tiny bit, we can see prediction market volume on-chain on Solana and how that's played out. So Jupiter's had their prediction market for a very long time. It didn't witness huge adoption. It kind of ticked along in the background, was more a proof of concept. DFlow has been integrated with Kalshi, and that's been integrated directly into the Phantom wallet. And you can see that pretty much as soon as that went live, DFlow has just been really eating up that volume. So it shows that if you make things available for people, they will use it. So yeah, well on DFlow there. They've been able to get around $22.4 million in volume, I believe, which is around 69% of the total market share since that went live. Yeah, and activity is still pretty high. I think there's about 11K wallets have interacted with prediction markets via DFlow and Phantom there. So there's a lot of really good data in this report. Thank you, Ario, for pulling that together. Thomas, have you played around with the DFlow prediction markets through Phantom at all?
You know, I have not, but I'm incredibly bullish that they're doing it directly on Phantom, right? So I need to get more into the prediction markets, as I keep saying on here, but I think that what it is like this is one of the best onboarding, opportunities that we have in Solana right now, right? So hey, download the Phantom wallet and you can get your prediction markets, right? Like I think that that's like a pretty easy way to get people to actually use Solana. So I think that this is really bullish. I think prediction markets are going to just grow exponentially this year. Everyone's calling for it this year. So I think it's big, but yeah.
It is. It's huge. And more fees for Solana projects. You can see the sort of breakdown here, even though DFlow had a huge dominance. If you look at this chart that Finn was talking through and this chart that Finn was talking through a second ago, it seems the sort of fees generated aren't quite as split. So the point is there's no monopoly. You know, these fees are generated and they're going to Solana projects. So that's super exciting to see. And look at this, the TVL lock and open interest also. It's growing. Now, Ario's concluded. By the way, if you aren't already subscribed to Solana Floor newsletters, I really suggest that you go and do this. This is a deep dive on prediction markets to a certain extent by our data analyst Ario. So go onto solanafloor.com and check this out. You're going to learn a lot from reading his weekly deep dives. I really enjoy them. Are we missing anything in terms of the future of Solana prediction markets here? Do we need a prediction market on when TB is going to get completely prediction market pilled and spend all of his money on Kalshi?
Soon.
Probably only takes one win, right?
Yeah.
We're getting that. We're certainly getting that. Okay, let's switch over to number 6. Now, this is, I suppose, the last story before we get to the honorable mentions. And we have a dishonorable mention, by the way, so don't go anywhere. That's going to be super exciting. Definitely not the least emotionally engaging story because, I mean, Thomas, I know you are a user, you're an early adopter, so you probably have some strong opinions on this, but Helium subscribers are furious, writes Finn, as Deepin Giant backs out of early adopter price plan. We've seen plenty of posts today and yesterday of the early supporters basically threatening to leave Helium Mobile. Some people went as far as calling it a betrayal. I'm not sure it is a betrayal, but then again, I'm not a user. Thomas, you are. Finn and I, as Europores, don't have access to these incredible services, unfortunately. So, Thomas, talk me through, first of all, how you feel. Do you feel betrayed? The last time we spoke to Abe, which was in Abu Dhabi, we were talking largely about the sort of Brazil expansion that they had, but I feel like he had hinted at this. So yeah, start with that. How do you feel? Do you feel betrayed?
No. So, I mean, price went up a little bit. That's fine. I mean, a $5 plan is ridiculous, right? So I had 2 plans, a $5 plan and a $20 plan. I think those are raising to a $15 and a $35 plan. So from $25 to $50. So I think there's 2 parts that they're trying to address. Like, I think that this was an early incentive to get people to use them. People are using them. You know, a $5 plan, where if I was to get a normal plan and go, walk into a Verizon or AT&T store, that's $100 a month. So, I mean, even a $15 plan is still a good deal. So I think that they're addressing like, hey, this was not like suitable for business. This is like an unprofitable business move. We can't sustain this. And the second part of that is like, they're having issues with their token going down only, right? Like there are threads. There's a really good thread by Meltem Demorse on, is DPIN even like working? Are the tokenomics, going to, take away from what DPIN actually does? And so they're kind of fighting a couple battles right now where you can't have an unprofitable like business plan and, struggle with your tokenomics. Now they're addressing both of these, and I'm still bullish on them. I'm still going to use them. I'm not dropping them, but it's also like one of those things where they've been in business for a while and they need to make these changes in order to survive. And I'm okay with that, right? I mean, it's an additional $25 a month for me. And maybe that's going to be, look at what the 2 million subscribers, that's going to make a big difference. And that's still a good deal for me, I think. And that's something that will help them last longer. So I don't know. I'm okay with it. Is what it comes down to.
I've got a yes but angle here for you, Thomas, and Finn. This one's largely for you because I believe you reached out to the Helium team and they commented as well. But I mean, as a sort of spectator, definitely don't have any money on the line, so maybe it's not for me to say. But going from 5 to 15 seems like it's going to ruffle a few feathers, right? And many of the OGs sort of sad to see this $5 program leaving. But I suppose if you're based in the US, compared to everything that's out there on the market, you mentioned $100 price point, maybe 5 to 15 doesn't really make too much of a difference. Having said that, curious what you think about this, Finn. They were talking about expansion into Brazil and Mexico, and I imagine the difference between $5 and $15 in places like Brazil and Mexico make a bit of a difference. So, what did the team say, and what's up with this $15 migration?
So I think the first point of that is that if you are in Brazil or Mexico, the $10 difference probably doesn't affect you because you probably weren't an early beta user. I'm throwing things out in the dark. That's what it sounds like to me as a Euro poor, as you say. Yeah, so I reached out to Helium and basically they came back, and I'm going to paraphrase, but they basically said that they understand that people are disappointed by this, but this is a key part of making sure that Helium stays sustainable long term. And they didn't, where they weren't in breach of any of their terms and conditions in doing so was the response they gave. So I see both sides of this. I can completely understand why you'd be disappointed if you were told you're going to have a $5 plan for the rest of your life, and as it turns out, you're not going to have that. But I think, to Thomas's point, it's still probably cheaper than most of the alternatives there, right?
Yeah. Yeah, it definitely is. And I mean, I think what they were doing too is they stopped doing buybacks, right? So what they're doing is they're incentivizing new users, right? The $5 plan, it's not new users, and maybe the plans down in Brazil are cheaper to incentivize a new area, which that makes sense to me, business wise. So
we just got a message here coming through a little bit late, I think, from one of the community members asking about whether or not they've missed the SKR hype. So I just wanted to reiterate that is not the case. If you have a Seeker and you haven't used it yet, you should absolutely open it and start using it. I've got one in the back there that I will start using for season 2. 10% of the a third of the total amount of tokens that were airdropped, that will be airdropped, are going to be in season 2. So that's 10%. Start using it. There's going to be more hardware, more developers, more dApps, more activity, I would imagine. You definitely haven't missed it. We have another comment coming through here. I just quit using Verizon instead, living in the middle of redacted, nowhere in the US. And they go on to say that self-service is very sparse. Paid them nothing for a few months. Okay, this seems to be a rather angry take. So, to your point, Finn, there's obviously two sides to the story here. I think if you're living in parts of the US where $100 or just under that is your sort of standard cost of having one of these services given to you, then maybe 5 to 15 isn't much. But there are obviously people that are not particularly happy about that increase from $5 to $15. Now, as our regular listeners are going to know already, we only put 6 of the biggest stories into the newsletter. But this is Solana. There's a lot happening, a lot more happening than 6 stories alone. So we have this honorable mention section that Finn creates every week in his newsletter. This week, I'm very proud to announce, as I mentioned a second ago, that we also have a dishonorable mention because, well, it deserves the attention. So Finn, there's a lot to get through. Are you ready to sort of power through these honorable mentions?
There's a lot to get through, and there's some exclusive alpha towards the end for people who are tuning in. So we'll start from the top. Overclock releases the alpha version of Mithril, an accessible full node Golang client. So for me, this is absolutely huge. We can come touch on that a bit later. Upexi inks a $36 million convertible private placement purchase with Hivemind Capital partners. So that's a back apparently so far this year. The Trojan Telegram trading bot launches a new trading terminal. So they're going desktop. You can trade your meme coins on your computer through Trojan again. Starknet's STRK and Lighter's LIT deploy on Solana via Near, Intense, and Sunrise. And just as I was actually writing this, we've just got Zora and Fun launched as well. So that's 2 base coins also coming onto Solana. So it is internet capital markets happening before our very eyes. The Titan aggregator introduces limit orders. Pump Fun introduces callouts where users can call a token to followers every 6 hours. This is an interesting move actually from Pump Fund to kind of chase that social trading game. We have X makes changes to developer API policies to discourage AI slop and InfoFi spam. I love this. Make the timeline clean again. Avicii Money launches named virtual accounts complete with a real-world IBAN. Solana's RWA sector crosses 1 billion in total value. There's an asterisk to this, which we can talk about as well. Not all RWAs are created equal, and not all are as composable as others, but we can chat on that a bit later. Tether-backed Ubit has added native Phantom support to enable Visa payments. Solana flips base in daily X402 transactions. CoinGecko explores platform sale at $500 million valuation. And X has unveiled smart cash tags showing real price data and related posts. So, massive list of honorable mentions. There is one dishonorable mention, to your point, Jack, and that is that former New York mayor, Eric Adams, I believe, has tried to launch a meme coin and rigged it to the value of about $2.5 million. So that's a shocking story. I feel like we're meant to leave this stuff behind. This is Q1 2025 stuff. Why are we still having official meme coins from political figures?
You know what I think, before we talk about what excites us the most in that honorable mention list, and I know you have some alpha that you want to get to as well. I think this is worth talking about because I don't imagine an outgoing mayor of a city like New York City, which is just it's had so much attention on it in recent months with the Zoran Mamdani election, and before that you had people like Cuomo. It's just so much attention is focused on New York City, whether it's for finance, Wall Street, all the rest. But the media optics really are terrible, and I can't get over this feeling that if the whole Hayden Davis saga hadn't happened, if Trump hadn't launched a meme coin and Melania hadn't launched a meme coin and Javier Milei and the whole Argentina angle hadn't happened, I think the Central African Republic launched one as well. All these very, very high profile meme coin launches that obviously weren't very profitable for a vast majority of participants. If that didn't happen, surely in 2026, the mayor wouldn't be trying these things. I mean, is this even legal? Can you even get away with this? I guess if the president's doing it, then anyone can do it, right?
Well, yeah, if that does set a precedent, right? If Donald Trump can do it, why can't anybody else? That does paint a picture, and I'm surprised we haven't had more since. And maybe that means that if people see that a former New York City mayor can do it, then any other mayor in the US can do it as well. So maybe we have a little mass extraction season from political officials again. Dark times, lads. Thomas, what do you take out of a lot of those honorable mentions? What's your standout?
Honorable mentions. So I'm very bullish RWAs. So I think crossing 1 billion is a huge mark. So I was doing a video on RWAs and talking about a lot of what's going on there. And it was 931 million when I started the article, and by the time I finished, I got fact checked because we had already crossed over the $1 billion mark. So I think that's exciting. I think in December we saw 20% growth in RWAs on Solana specifically. We're seeing record amounts of trading, market cap. It's all happening on Solana. So I think that it's just the beginning. And I think we saw McKinsey Consulting Group and Boston Consulting Group. They both have multiple trillions. I think 2 trillion and 16 trillion of tokenized assets by 2030. So I mean, you see numbers like that, and it's hard to not get super excited about where we're going.
Yeah, I think there is an asterisk to a lot of this RWA market size because a lot of it is treasury assets, and a lot of those assets through Token 22 extensions are gated to certain individuals. So only people who have KYC, who have kind of signed the right forms in the real world, are able to access those. And it kind of rubs me the wrong way in a sense that the promise of on-chain activity and the promise of DeFi is that everything is permissionless and that anyone can do anything on chain, and that's basically the reason that we're all here. So in a way, I think gatekeeping a lot of these assets is kind of counterproductive to that thesis. Obviously, it's great that can exist on Solana and that people who are able to use those can, but I prefer things like tokenized stocks that are publicly available that anyone can trade from any single wallet. Do you know what I mean?
Yeah, I 100% know. But do you think this is do you think they're starting out with it being a little bit more gated and then they're going to be opening those up? And do you think that those will be tradable in the future, or is just kind of the nature of those assets, they can't be traded, but they're on chain?
I think things that are limited to accredited investors in the real world will remain limited to accredited investors on chain as well.
Yeah. Yeah.
For the
That's a fair
foreseeable
point.
future. Yeah, I think that is also going to be the case. Now, if I may, I think for me, the most exciting story out of your honorable mentions list there is the CoinGecko acquisition news. Now, $500 million is a huge number, whichever way you look at it. But the fact that it's a crypto company that's not just a crypto company, but it's a data focused crypto company, right? To me, this shows the industry is maturing as a whole, but nobody would value that at potentially $500 million if they didn't see the industry sort of moving in the right direction and ascribe some longevity to it. And B, I want to say, massive shout out to the CoinGecko team, total chads out there in Southeast Asia. So shout out to Bobby and everyone working for CoinGecko, because they make my life so easy. If I want to go and find out a price, or take a screenshot of something, or I want to see how much Bitcoin or Sol or ETH has moved over the last 7 days, CoinGecko obviously is where we do that. So totally deserved. Shout out to those guys. Now, it's probably a good time to dive into the Clarity Act. We are getting towards the end of our conversation here, but this is a conversation that's going to be going on, whether you like it or not, for at least the coming weeks. And I suspect maybe until November, when the US midterms are going to be happening as well. A lot is sort of hanging in the balance. So massive win for the banks, unfortunately, it seems. Tiny refresher, though. The Senate was scheduled to discuss some markups on the 15th. It turned out they didn't quite reach the agreements that they wanted. The Agriculture Committee sort of delayed their amendments. The big banks basically said, we don't like stablecoin yield. Now, the big banks who make billions and billions of dollars every year turned around and said, hey, look, if stablecoins can offer yield, then millions of dollars is going to go flowing out of our banks. We're going to make less profit, and all of these individuals are going to be able to sort of keep their money on chain, and they're going to be making money without us. So, I mean, this to me is the core of disintermediation, right? We built this industry because we don't really want to be relying on massive banks that have in the past been predatory. And I think I'd like to end with my little monologue here. Something that Mike Dudas said. We spoke to him in Breakpoint, and he is, I believe, going to be joining us on the Big Picture sometime next month. He said, "You don't hate banks enough." And I really can't agree with that. Lads, what do we think? Are banks sabotaging the Clarity Act? Should we have foreseen this? What do we think?
I think they're fighting for their life, right? I mean, they make a lot of money by doing this and by not allowing other people to give yield, right? If you're in a US bank savings account, you're looking at like 0.2% yield, where they're getting, whatever the Fed rate is, which is almost 4% on that. So that's they're coming for their bread and butter. But I was actually kind of surprised to see that there were positive takes on the current way that it was written as well, that it was already a win, and that this was mostly Coinbase, standing up. And Coinbase has, their influence right now within, a lot of the regulatory side is massive. So they came out strong against it because they wouldn't be able to pass that yield on to their customers, right?
But didn't Brian Armstrong and with that, Coinbase also pull their support for this now because of the rejection of stablecoin yields? So they were a big part of it, getting it to the point where it could be voted on, and now they've completely pulled out because it's not what they want to see. So to me, again, it's a massive L for us and a huge W for the banks. Finn, are we sad, or did we see this coming?
My gut feeling, and this is going to make me very unpopular with many people, is that the Clarity Act is a Trojan horse, and it's perhaps not everything it's cracked up to be. So if Clarity Act passes, and all of a sudden we have a lot more traditional institutional fingers in our DeFi apps, this kind of opens the floodgates to having KYC verification on DEXs and things like that. And for me, that's the absolute antithesis of what crypto is about. So I'm not banging down the doors to get clarity across the line as soon as possible. I think ultimately most people probably won't care, because if this is a thing that makes price go up, then people are going to be happy to have it. But I think it is a bit of a departure from our fundamental ethos.
So Thomas says banks are just covering their own asses. Finn says it's a slippery slope, and next thing you know, we've got CBDCs and everything you
The Fed
spend
wants
is
your
gonna be
wallet
monetized.
address. Don't let them
Yeah.
have it.
We don't want that. On the other hand, Raoul Powell made a very compelling argument not too long ago to us that, it's going to be that sort of major hurdle that once we get past it, the floodgates are open. Liquidity's obviously coming into the markets. MT is rising, and the Bitcoin price will probably catch up with gold and equities and commodities and so on and so forth. So remains to be seen. But we do know that by the end of January, we'll have some clarity about whether or not the Clarity Act is going to pass. Now, let's move on to the final
quickly,
section.
Jack, I'm going to jump in because we forgot something. There's something very, very critically important we forgot to mention.
Is this the alpha that
This
I
is the
almost
secret
glossed
alpha.
over?
Yeah,
Mystery
so,
alpha.
Secret alpha coming through from the team at Remora Markets is that we're about to get 5 new tokenized metals hitting the chain. So it's in the works. It should be live very, very shortly, but we can expect to see from Remora Markets for gold, silver, copper, palladium, and platinum. So if you've been really itching to get your hands on on-chain silver and join that absolute blistering run, Remora is going to make it happen for you. Thomas, I want you to sell me on it, because I look at these charts and I see gold, silver, copper all up parabolically in the past 3 months. Why should I still be wanting to buy metals at this stage?
Because metals are up only, right? So we've seen a significant change in the way that metals are changing. So for Remora to bring these all on chain is very exciting. I listened to a Matt Hogan interview recently, and gold is kind of it's on a little bit of a super cycle right now. We're seeing a lot of the central banks that are buying, I think it's 1,000 tons a year right now, and then once gold started pumping, other metals started pumping. So basically what we're seeing is it's an altcoin cycle right now in metals. So we see silver pump, which is primarily retail, and silver is just all-time high. Like it's ridiculous if you look at that chart. And now I think just the other day, Chamath came out and his trade of the year for 2026 is copper, right? So they're moving down, across to other metals. So, we don't have to fight this anymore, right? The metals are pumping. Why not have some, and why not do it, on Solana rails? So I'm incredibly excited about this. I think that there's going to be, a great way to hold these. You can put them in your hardware wallet if you want. So I think that there's a lot of like real advantages to these, and I'm really excited about this. So I actually am preparing another video based on metals coming onto Solana. So I'm pumped. What do you think, Jack?
I mean, whatever way you look at it, to your point about RWAs in general earlier, more money on chain is, I think, net positive. If Matt Hogan argues that silver is basically the alt season, if gold is the sort of BTC of metals, we're definitely seeing that rotation at the moment, with silver having an insane run. If Chamath thinks copper's next, then that sort of validates the idea that the rotation continues, and Remora Markets is obviously pretty well positioned to offer those on chain. So I'm bullish. I'm bullish metals in general. I've been long gold and silver for quite a while now, and if I can now not use a traditional brokerage to go long things like copper and palladium, you mentioned, I think another one there, then that's a win-win for me. I'll be long in those things on chain, because I don't really want to be forced into off-ramping all of my funds at the end of a cycle. Not that I think it's the end of a cycle, but the more of my funds I can keep on chain, the happier I am. So that's my take on that. Okay, now finally we get to the stat of the week and the tweet of the week. Again, if you haven't subscribed to Finn's newsletter, I strongly suggest you do. There's some zesty bangers in here usually. So let's get to the stat of the week. Solana DEX volumes. Finn, what are we looking at?
So as mentioned earlier, the thing that is most on display in this chart is that meme coins are back in full force. We saw meme coins tracking at around 10% market dominance, taking around 10% of all on-chain volume. And in the last 2 weeks, that has exploded back up to 60%. People are here, people are hungry, retail is trading in search of that fabled 10x. And it's good for everybody on chain, because all of a sudden that's more activity, that's more volume, that's more tips being paid to validators. Validators are happy. Yeah, it's great news. You might not like meme coins, but having a meme coin volume is generally pretty good for the chain in general.
And then
State of Solana in a tweet. So shout out to 8-Bit Penis for bringing this one up here. This is in relation to the Ranger Finance MetaDAO saga. So as 8-Bit Penis says, this is perhaps the worst thing to happen to ownership coins, by the way. We need change. Teams shouldn't have to deal with this in their first week. And I think he's absolutely right. If I was on the Ranger Finance team, I would be spewing that a bunch of token holders holding 25% of the treasury at ransom within 48 hours of launch. I think that elegantly summarizes what we're looking at on Solana this week.
But does this sort of negatively reflect on the Ranger team or the token holders or the ownership model? I guess, like, what's your sort of one-line takeaway from this? Because, you know, 8-Bit Penis rightly points out that it's bad for ownership coins and that we need change. But then surely that change has to come from the people that are participating in this, right? And if the participants are putting pressure on the treasury to just pump their own bags, then is this like a governance discussion where it's just a flywheel of bad decisions being made?
I think the liability in this circumstance is with people who bought their ICO because they thought it was going to 4x, and then as soon as they dropped 10%, they decided to liquidate the treasury to try and make that token go back up and recover their losses. I feel for Ranger Finance that they've been put in this position, but there is a counter argument to this. And let's say in a month's time, this buyback is done, and for whatever reason, Ranger is trading at 50% higher than what it is now. Perhaps the discussions around what's happened this week become very, very different if ultimately the Ranger token goes up because of this. So while it's all kind of doom and gloom and everyone says this is a failed experiment today, we won't actually know the full outcomes until probably a month's time. I still think it's ridiculous that the team is being held hostage like this, but there may be different outcomes that come in the future.
I agree. I think we'll be following that one. We'll be following prediction markets. We'll be following the Seeker updates that are coming next week. Now, one final plug here is that before we sign off, the week of January 29th, which is the last week of January, we're going to be launching our new show called The Big Picture. The point is to bring on experts and TradFi giants. We're talking about macro, about politics, about all things crypto, how they all sort of collide to shape where the industry is going. We briefly touched on the shenanigans around the Clarity Act, so there's a lot more of that coming. If you have strong political opinions, beliefs, if you have macro knowledge, or you just want to sort of get a sense of how this all ties into to impact crypto, how policy shifts are changing the Solana ecosystem, then come and join us. I promise you it's going to be good stuff. We have an absolutely star-studded lineup. Now, gentlemen, that is all we have for this week. Finn, Thomas, thank you both for sharing and keeping us all informed. And if any of our audience members do want Finn's full breakdowns and his spicy hot takes, then of course go to solanafloor.com, subscribe to the newsletter. It is delicious and you will learn a lot. Finn, Thomas, GN to you both, and I'll see you next week.
GN, guys, always a pleasure.
Thanks all.